All right, good morning, Valentine. How's everybody doing today?
Good morning. Doing good.
Awesome, thank you, Zachary. Just get the volume up here a little bit. So I can hear you guys. Perfect, perfect. Everybody have a great weekend. Beautiful weather.
Great weekend, Chip. Panthers won, and great weather. How about you?
How about that? Panthers playing over 500 ball.
I'll
First
take
time
it.
in many years. Yeah, I had a great weekend. Thank you for asking. Got to spend time with my granddaughters here in Charlotte. So it's kind of cool doing some things that they had going on this weekend, and yeah, just had some good family time. So that was fun. All right, guys, let's jump into it. I'm gonna go right into screen share here. And this one. And I hope you guys can see up here a chart that popped up and it says National Single Family Inventory. Can you guys see that okay on your screens? Got it. Thank you.
Yes.
All right, so here we go. We're moving into that time of the year. Here we go. I mean, we're almost in November. October starts a period of time for us. Of course, it's the first month going into the fourth quarter of the calendar year. We start to move into this thing called seasonality. What is seasonality? It's exactly what it sounds like. It's the season of the year when we start to see home sales start to soften a little bit, activity in general kind of softening a little bit compared to its peak time of the year, which tends to be spring and summer. So if you really broke the calendar year, if you looked at the 4 quarters of the calendar year, the second quarter and third quarter, excuse me, are going to be the period, the 6 months where we see the highest level of activity. Then the fourth quarter and the first quarter of the calendar year are where we're going to see the lighter amount of activity as it relates to real estate. So I wanted to kind of just give you that phrase in case you haven't heard it before, seasonality. And here's what we look at in seasonality. And one of the things that pops up in this particular chart is the national single family inventory. In other words, the homes available for sale and what it looks like. And the cool thing about this particular chart, it goes back to 2019, pre-pandemic. And of course, it's carried us through the pandemic years as well. So what we can see pretty much in every one of these years, you see fairly similar lines. The only one that's a little bit of an outlier here, of course, is 2020. And what started happening in like April and May of 2020, people started buying homes like crazy. So of course, inventory kept dropping. Not a lot of homes were coming on the market. Those that did, of course, went under contract and closed very quickly, multiple offers. So this is the trend line here in 2020 that isn't going to follow the typical kind of patterns we see of seasonality. Other than ending the year in 2020, it pretty much ended like all the other years end. Okay? So up here we got 2025. We can kind of see the trend line here. We had a little bit of a blurb here in September where fewer homes hit the market, yet there was still enough buying activity that inventory actually had a bit of a drop. Then we saw a little pickup in activity because interest rates were going down. So that caused a lot of people to kind of get back into action again, get their houses on the market, start buying. But I want you to notice one thing here that kind of has really happened since about, August. Really, if you go back to, I can probably go back to July even. We basically have been relatively flat, the exception of this little dip here. We've been relatively flat, of course, on inventory. What does that mean? Fewer homes coming on the market. Fewer homes coming on the market. We tend to start seeing a little bit of a decline, usually around October, November, every single year again, without the exception of 2020 into that equation. But this is what we start to see. Yet we have been we kind of peaked out here. Really, I'll go back and say July. You can say July, August 1, something like that. So this is the amount of homes available for sale. This little dotted line up here represents a line that says 17% above last year at this time. And right now, national numbers as of this report was done last Monday, I think, is when I got it. And so 857,000 units for sale in the United States. All right, so that's that one. Let's keep rolling here. I found this interesting too, and I love the guy who does this and is in a podcast, a podcast with Housing Wire. He's an economist around our industry and really, like, I swear to God, the guy's got a crystal ball. He can nail everything. He's pretty much spot on all the time. But I wanted you to see this for perspective purposes. During the years of the housing bubble crash, let's go back to 9, 10, 11. New listings were coming on the market between 250 and 400,000 per week for many years. Nationally, here's what the numbers look like: 64, 65,000, 63,000 in a week, compared to up here during the crisis, 250 to 400,000 per week. So this is a perspective too, when a lot of times people say, well, housing has a bubble right now, or, the prices are too high, they're going to crash, or I'm surprised that, prices aren't going down as fast as they are. Well, we're kind of talking about the law of supply and demand showing up here in terms of how many new listings come out of the market, what does the inventory look like compared to how many homes are being bought. And what we're going to do in a minute, we're going to go over and look at some local numbers around this stuff as well. All right, so let's look at new listings coming on the market. Again, these are national numbers. This goes back to 22, 23, 24, and here we are up here in 25. So we saw that number, that 65,000 that we just looked at earlier. Compared to October of last year, it was 63,000. Compared to October of 22, it was just almost 60,000. Compared to October of 23, it was 57,000. So we're within a few thousand of terms of like the amount of new listings that are coming on the market in this time frame. The cool thing about this gives us a little bit of a forecast of what to expect. And with the exception of last year, we had a little bit of an uptick in November in terms of the amount of new listings coming on the market. Then, of course, is always what starts happening as we move in through the month of December. It drops dramatically, but then we start seeing it getting ready. These are going to be the listings that are just about, people are through the holidays and they want to get on the market to be ready to go for the first of the year. Then we can come over here to January and start seeing what our activity starts looking like pretty quickly throughout the months of January, right? Again, with the exception of last year. Last year, we were at the lowest point we had been in probably, I think this number was something like the lowest point in, I want to say it was 30 years or something like that. So a really significant drop in the amount of new listings coming on the market. All right, price cut percentages. 1/3 of homes experience price reduction in an average year before they sell. All right, so let's kind of take a look at this. Here are the percentages of homes that saw price reductions last week. So in 2025, this year, 42% of homes. Last year at this time, 39% of homes. And here we go with the price cuts and what it starts looking like. This number up here, this is 2022. What was happening in the fall of 22? Anybody remember? Interest rates. Interest rates were going through the roof. They started climbing here, like in July, and we could start seeing exactly what started happening to price reductions in 2022 as interest rates climbed. And up here, they got to that peak of 43% in November of that year, okay? So again, this is a graph, just a tool or resource we can use as something how we can explain the market, how the market performs, the difference between supply and demand, what interest rates do to drive everything that we talk about as it relates to real estate. And then the 10-year yield and the mortgage rates in 2025 forecast, mortgage rates between 5.75, 7.25, the 10-year yield fluctuating between 3.8 and 4.7. I won't get into this. The 10-year yield or the 10-year bond is the one that kind of drives these numbers up here in terms of mortgage interest rates. So we just see a little bit of, a climb here between these numbers, and that's why we kind of see rates still all over the place. Well, I shouldn't say all over the place. There's a lot of movement in the rates. But the good news is we can get that yield closer to 4%. If it's 3.8 to 4%, we should start seeing rates that are going to get us probably around the 6% mark, maybe into that upper 5. And what typically is going to happen from what we're seeing here is that we'll see an increase in the amount of new homes coming on the market, because now the gap between the interest rate they may have that they acquired during COVID and the interest rate they're looking at if they've got to borrow money to go buy their next home, that gap is a lot narrower. It's really there's a little psychological disadvantage here to, get somebody out of the 3% and tell them to buy, they got to go have a 7% mortgage rate, right? But if that spread goes down between 3 and 5 or upper 5s, it just sounds and feels a little bit better. So that starts increasing the amount of new listings coming on the market as people go, now's the time to move. I want to get my equity. I want to put it into play in a different property, more that suits my personal needs that I have now. And at least the rates, while not 3%, 3.5%, 4%, at least they're not, above 6. And that's the rationale that people will start using to get active into the market. All right. So now I want to go over here and I want to look at some SAM reports, because here's what we were really talking about. We're talking about new listings, homes for sale, on these charts and months of supply. So here's what I did. I looked at the Charlotte metro area. I looked at single family traditional sales. I didn't include foreclosure, short sales, or anything like that. But what I wanted to do here is just kind of give us an idea of how is the Charlotte market performing. I've got this one going back to January of 22. And we can see what our trend line looks like in terms of new listings coming on the market all the way through here. And we started to see, if we look at November of last year, let's go back to October of last year, about 34,494 new listings coming on the market in this period of time, October of 2024. Actually, is this going to be, let me go back to September, sorry. September of 24, 34,286. September of this year, 37,244. So we see a little bit of an increase, about 3,000 roughly more units coming on the market as new listings. But if we look at the overall trend line, it's not like it's just spiking up either, is it? It's kind of like it's there. We're seeing a little bit of an increase. And even if I go back and I start looking at like May of this year, there's 36.8, there's 36.9, there's 37, there's 37, there's 37. See where I'm going with this, guys? In the last, really for us, 5-6 months, the amount of new listings coming on the market has been relatively flat this year, or since about April or May of this year. Okay. So now that's the new listings hitting the market. Let's look at homes for sale, which of course will be the inventory available at any given time. We have the new listings coming on the market every month, but then we add that into the homes that are currently on the market that have not gone under contract yet. And now we have the total homes for sale. And this is where we start seeing a little bit more of an increase, steady climb. But even that climb isn't like so dramatic. If I go back to where do we go to before April, we have 5470, 56, 58, 6,000, 61, 62. These aren't dramatic increases in the amount of available inventory, that available homes for sale. We're literally only adding roughly about 100 units per month in the Charlotte metro area as it relates to single family homes. Okay. If I come back here to say January of 2024, where we had almost 3,700, it is a significant increase to September of this year. But let's go back to January of this year, where we had 5,000, and now we're sitting at 6,200. So basically in 9 months, we've seen about a 1,200 unit increase in the amount of available homes for sale. But here's the other thing we got to look at. We have to keep our eye really on the pending sales. And this is where we see a little bit of a change here. If I go back to January of 24, we're putting pending about 26,000 units a month. And you can see that number really has been fairly consistent almost 28,000 September of this year. It's been fairly consistent going back to January of last year. The difference between every single month of what we're pending, month over month, it's really very, very, very little change. There's slight change, but very little change. So about 28,000 units a month. So what that's telling me is that we still have a very healthy, active market in terms of people that want to buy in our Charlotte metro area. And of course, on this one, if you look up here, this is all price ranges. I did not break this down by price range. I didn't break it down by bedroom count or anything else. Again, just Charlotte metro, single family, traditional sales. Okay. So now let's look at months of supply, what that's starting to look like. Here's January of last year, 1.6 months. January of this year, 2.3 months. Slight increase. And then if we keep going up, we get to September of this year. We've gone from January 2.3 months to September 2.8 months. Balanced market, somewhere between 4 to 6 months of inventory is balanced. Really, you'd almost say 6 months is really the balanced market. Anything more than that, we're in a buyer's market. Anything less than that, we're in a seller's market. So we're still in a pretty healthy market in terms of the activity, the amount of buyers who want to buy. They have enough choices to go out and make offers on. So we're not seeing like those 2020 and 2021 scenarios, multiple offers on the same property and just outrageous offers coming in on paper. That doesn't happen anymore. There's enough inventory coming on the market. There's enough homes available for the buyers who want to buy that it's staying rational. And that's why we're seeing that appreciation rate in our market hanging around the 2% this year, which is a little low from what, kind of the ideal appreciation mark needs to be. Ideally, we want to see it around 4, but we're not in a declining market. We're not seeing declining values overall. Now, could we see declining values in certain price points? Sure, we did that a little bit at team meeting last week, and we looked at like the million and up. And remember, I compared it to Charlotte, and then I compared it just to 28277, just to see kind of what that looked like in that price point. And we saw some, a little bit more softening in that area than we did, overall with how we're looking at everything here. So that's our months of supply. Let's go to closed sales. I want to take a look at this over here. January of last year, 26,662 units closed, Charlotte metro area. Our low was June of last year, just under 26,000. January of this year, 26,959 compared to January of last year, did about 300 more units. And pretty much if we look at it every single month where we've been hanging out in terms of our closed units, right around the 27,000 mark. So we're not lighting it up in terms of like this massive increase in the amount of closed sales. But again, this is giving us more of that balanced market feel, even though most of supply is telling us maybe we're still pretty entrenched into a seller's market. The sellers are going to have to be really like rational on what they're offering. The condition, the location, and everything all has to be in alignment. And of course, they can't ask 50,000 over what the home is really worth compared to like our closed sales and what our CMAs tell us. As long as a seller is nailing it that way, they're going to be less susceptible to price reductions. And of course, if you're less susceptible to price reductions, if you're on the market a fewer amount of days, in other words, you don't want to be on the market 60, 90 plus days, because it starts to send the signal to the buyer that either something's wrong with the property is overpriced, the seller is unreasonable in either their pricing or their negotiation. That starts to send that signal out there to the buyers. And that's why ultimately the longer a property is on the market, ultimately the less they're going to net. And we see that show up when we can do our CMAs, the way we do our CMAs as well. So guys, that's the stuff I wanted to give you today. Again, as usual, there's a lot inside of it. There's a lot of data in there. What are your thoughts? What are your comments? What are your questions? How are you guys using this with your conversations with buyers and sellers?
Anybody that has a listing appointment really needs to utilize that. we utilize the inventory, but am I really telling them, hey guys, no matter what the media is saying, 26 to 28,000 consistently are pending sales and 27,000 are closed each month? They're not hearing those stats.
Nope. No, because they're gonna look for the negative things, because that's what everybody wants to hear, or they think that's what, sells the news, right?
Right.
We look at our average sale price, let's kind of go to average here. See, our average sale price is still climbing. And I say climb, let me just use the word increase. So if I go back to January of 2024, we were slightly under 500,000. January of this year, we're at 532. That represents almost a 6% increase right there in 1 year. And January of this year, that 532 to 546. Okay, again, we're not lighting it on fire, but it's not a decrease. It's an increase of about $13,000 in the span of 9 months. I don't know too many people that would be upset if you tell them that, could show them that had they bought an average price of 500,000, that likely they made, 13, 14, 15,000 on it, just in pure appreciation from the market in 9 months. I don't think too many people would be disappointed with that. Now, here's the thing, if they're trying to sell the house immediately, then they may not like the number. But if they're buying this and they're gonna be in it for a while, 3, 4, 5 years, it's important, they probably want to know this number, but this number really doesn't come into play for them either, does it? So I think this is another great thing that we can show them, to just show again how the market is performing. Heck, even if we go down here to January of 22, we're going back, 3.5 years, 420, 546, $120,000 increase. All right. Anybody else, additional thoughts, comments, questions? Or how are you using this data?
Hey Chip, we cover this every Monday, with the team, and we're also using this in our client updates every week, and then we're tying in the weekly report that shows the last quarter from Canopy or from Fast Stats. And what it's doing is creating some urgency with our sellers as we're having that conversation as to whether to wait till spring or wait or get on the market now. We're showing that the market overall, if you're priced right, is still moving and doing better than last year in the Charlotte metro. So it's allowed us to get some listings off the fence and get them on the market.
Yeah, I love that. Thank you for sharing all of the details too, Jim, of how that's kind of playing out from you, what results you guys are seeing from using this kind of information. I want to give you guys something here too. If you see, we talked about seasonality at the very beginning of the call. Let's go back to November of last year. Actually, let's go back to October of last year. Let's look at the third or the fourth quarter of last year. 26,232 closed, 239 closed sales. November 26,432, slight increase. December 26,774. So every single month in that quarter, we had an increase. If we look at, of course, we can only go to September. We don't have October in here. Here's why I bring this up, because this kind of is indicative of the market we're in here. If I go back to January of last year, this is kind of the trend that we've experienced in our local market, say over the last, 20, 22 months, something like that. We are going to see, most likely, we're starting to see it in here a little bit, of an uptick in activity in the fourth quarter. There is that sense of urgency Jim mentioned. Sometimes people want to be in by the end of the year. They need to be in before the start of the new year. It's a great time of the year to find motivated sellers who are looking to start the year new and get their house on the market. I can tell you, some of my busier months for listing appointments were like January, because so many people have New Year's resolutions. They've got goals. It's that time of the year where people are like, here's what I want to accomplish this coming year or in the new year as it relates to my house. So there's tons of opportunity in the month of January to get in front of sellers. If we start educating them now and providing this information, you can start showing them why it can be a very good time of the year for them to list their house when we start looking at all of these things combined. Or to Jim's point, just go in and pull the one-page fast stats and send that out. Bottom line, get in front of the conversation, get information out to your people. Because you never know who in your world is ready to do something, they just haven't contacted you yet. The information you put out there can be the thing that causes them to jump into action. Because you're giving them something they're not getting from the media. This is our job, to be the local expert and to educate. Anybody else? One more final thought, question, comment,
I know you're a numbers guy. Good morning, Chip. It's Fatima.
Good morning.
And I know that you showed in our team meeting live numbers. So when you look at what we've done so far for October on closed sales, do you see it, see an uptick? Or do you see it the same as kind of in the same trend as September? What
I mean,
closed sales?
Yeah, I mean, we see, yeah, I think if we just even look at the graph here, the line, we definitely see, an uptick. I could probably, see if I can do it this way. I look at a bar graph and kind of look at, the years. We're actually ahead of 23. We're down a little bit from 24. But what it's showing is that, I'm sorry, we're ahead a little bit from 24. We're actually up 5.7% in closed units in September compared to September of last year. And we're almost exactly even with September of 2023. So the amount of properties we're closing is actually up versus last year. So I think, again, to me, this is how I like to use this stuff, guys. I can answer a lot of questions. I can handle a lot of objections by giving people real information, not just simply using words and scripts. We got to show them.
Thank you.
Yep. Thank you for asking. All right, gang. Appreciate you all being here. Make it a great Monday. As always, anything we can help with, please ask. You guys have a great day. Talk to you soon.